Look, our view on BOJ is pretty non-consensus here at Nomura. We actually see a very good chance that we could get a BOJ YCC tweak this week. If we are right, that would send dollar yen down by a number of big figures, maybe 4 or 5 big figures. The thing I'd say about YCC, in contrast to the rate guidance, the cash rate guidance that we get from, say, the ECB and the Fed, when it comes to YCC, central banks simply can't telegraph what they're going to do. Could you imagine a situation where the Bank of Japan said, we will defend our target until the end of the month? Investors would just get limit short ahead of that date, and the central bank would be forced to buy to defend a target it no longer believes in. So central banks can't give guidance on YCC. We note that inflation has been moving higher for a number of months in Japan. So here we see an above average chance that we could actually get a YCC tweak, which would be a very big deal for markets.
What kind of tweak, what extent of tweak are you thinking here, Andrew? And apart from a few big figure moves on the yen, how much more volatility around the markets will that cause?
Well, last bit first, enormous volatility. Extreme policy accommodation from Japan for multiple years, of course, has been a big feature of our markets. If that dynamic were to change, I think that would send shockwaves around the globe, and it would not be, a one-week trend in response to that. In terms of what they could do, our Japan economics team think the most likely thing they would do is shorten the duration of the yield curve target. So, of course, it's currently positioned around the 10-year point. We think they could bring that forward to around the 5-year point or even the 2-year point.